Stock investment tips. Averaging down into a losing position. Only concentrated in too few stocks. These are important tips. Because if the stock is falling off and you are averaging down, then you are an idiot. Remember that. Why am I saying this? Because throwing good money after bad money is a bad advice. You have bought a stock and it's going down. What does it mean? It means that your calculation was wrong. You were standing on the wrong side of the trade and it's falling. So, what's the solution? Either book your loss right there or don't average. Because if you want to average, always wait for that losing position to become profitable position. Because if it is losing money, then it may be following a trend down and you may get stuck in it. The second point or second tip is only concentrated in too few stocks. You have bought only 2 stocks and they both start to go down. Then you don't have options. You are stuck. So remember, you need to diversify. Falling in love with a stock. That is another problematic thing. You believe Apple is the best company. I also believe that it's a good company. But if you fall in love and you will always think that it's the best company, then you're wrong. Because what really happens? Let's discuss Kodak. Kodak was the king of its day. Everyone loved Kodak. But within a few years, Kodak was bankrupt. Look at Nokia. In its heyday, it was the best cell phone company of the world. Apple came and destroyed it. Just look at it. Now Apple is the top-notch company. But Nokia, no one wants to own it. Yes, it's a good company, but it's not like Apple. That's the thing to remember. You cannot fall in love with Nokia because it's the number one. There may be some other company that may destroy it completely. So you need to remember that. You cannot fall in love with a stock. Only concentrated in one sector. You have bought all tech companies. So if a tech fall comes, remember .com bubble, you will lose most money. So you need to concentrate yourself in different sectors. If you own Apple, don't go for Samsung. Go for some other sector. Let's go for steel. Why? Because concentrating in one sector reduces your profitability appetite and increases your risk. Because remember, making money is the easiest part. Stop losing money is the hard part. So you need to remember that. You may buy Apple and it may increase 20% a year. You may buy Apple and Samsung and you have got 20% return in 2 stocks. But if the tech sector goes down, then you will be losing far more money in Apple and Samsung both. So it's a falling trend. And that's what you don't want to be in. You always want to be in the market. And by me saying that in the market, I mean that you don't want to completely close the business. You bought a stock, it went to 100, then it started to fall and went to 0. So your account closed, you are thrown out of the stock market. You don't want that. Therefore, you always want to be within the game. If you bought a stock and it's falling, then you have to have money in some other sector that you can move around because it's your bread and butter. You cannot close your shop if you get stuck within a stock. Money invested in liquid stocks. Always invest in liquid stocks. Excessive use of leverage. If you're using that, then you have decided to fail. Because I have never seen a person make money through leverage each and every time. You may be successful once, twice, thrice. But you are playing with the devil, and you never know when the devil will strike. When a stock goes up to 40%, always sell 25% of your position to lock in profit. Now, this is what I call a strategy to be in profits. I'm not saying follow the strategy. I'm just telling you what could be the best strategy to make money. If the stock goes up 40%, sell 25%. When your position is in 80% profit, that is double, sell another 25%. So at 80% profit, half of your position is sold and half is with you. Now this makes you 125% profit on your initial position. 40% up is your sell technique. So on the first initial 40%, you sell 25%. On the second 40%, which makes the total profit to 80%, you sell again 25%. Then again it rises 40%, so it's now 120%. You again sell 25%. So basically in 4 turns, you sell your complete position. Always keep an 18% stop loss on each and all position. So if you have sold your next 25% position at the 80th percent profit gain, then remember your stop loss is minus 18% from 80%. Let's say 60% or 62%. So if the profit goes from 80 to 62%, that's your stop loss on each and all positions. You get out. You don't sit to see it go down to 0% profit. So if you see a stock rose to 80% and you sold half your position and then the stock falls, now from the high keep an stop loss of 18%, and if it hits, then exit out of your remaining position. So you're out from the whole position at 60%, at 62%. Thank you.